There's something interesting happening with Monad. We had a lot of attention upon launch. Everybody watched videos on Monad. Then came the big decline. Nobody was interested. But now things are recovering again. And that's not just in terms of attention, it's also in terms of usage. Let's have a look at the on-chain data, the data most people are not considering. Let's have a look at whether or not it makes sense to buy this dip in Monad. So this is what I mean. The very first video on Monad on this channel outperformed the average video. It got roughly double as many views as the average video on this channel. Then came a follow-up video and that got way less views. But the recent video, interestingly enough, gets a lot of search interest again. And why is that? It might have something to do with the recovery of the Monad price. This is Monad relative to the others market cap. So how is Monad doing relative to all other altcoins? We saw an initial dump of almost 60%. But on the 18th of December, things have turned around. Monad outperformed the rest of the market by more than 33%. Here is the TVL on the Monad chain. It continues to slowly go up. Here is the stablecoin market cap over time. There's no inflows, there's no outflows. Here are the chain fees over time. A lot of attention at the beginning, but it seems like we are not shrinking anymore. We are at a relatively consistent rate. Here is the chain revenue, same picture. After the initial bang, a quite quick decline, but now we are relatively stable at that lower level. And that might be a cause why the price is also stabilizing. What we see over here, that's the number of daily transactions on the Monad chain. A lot of hype initially, now we are coming down and maybe we can stay at roughly 1.5 million. Here's the number of daily active accounts. That has come down to 40K. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. Is this our base? Are we coming back up? Or is this shrinking towards zero? We will get the answer in the next few weeks. There's also a ported version of the Monad token on the Solana chain. And we can have a look at the details of that token using our on-chain analytics tools. The tools, by the way, are available for premium members of this channel as well. You can input any Solana token into this tool. On the left side, we see the number of first-time traders versus recurring traders over time. This has also now bottomed out. On the right side, we see the number of token transactions per day. It seems like we have a clear reversal here, very similar to the outperformance. The trading volume in US dollars of the Monad token, however, is not recovering as quickly. The majority of trading volume happens by the small retail wallet that have less than $1,000 worth of the token. On the left side, we see the number of Solana wallets with at least 40,000 Monad tokens. That's roughly $1,000 worth of the token. This has also stabilized. There's no more selling pressure here. In the middle, it's $10,000 worth of the token. This is even slightly increasing. On the right side, we've got the number of wallets with 100,000 Monad related investments. It very much looks like large retail is accumulating the token more and more. And that's the wallets that have between $1,000 and $10,000 worth of the token. Monad is still actively traded, both on the spot market, but also on the perpetual futures market. On the spot market, we had 42 million worth of trading volume in the last 24 hours. On the perpetual futures market, we had 114 million. That's on Binance. So there's more trading on the perps. The trading volume is slightly going up, but what's going up even more, that's the open interest, the amounts of bets on Monad. And when this continues to grow, this will be a supporting force for the price. This might be one of the reasons why Monad was able to outperform. It was more bets on the perpetual futures combined with less selling pressure by the retail investor. Overall, things are stabilizing. It seems like Monad can potentially turn around. There are some metrics though that we have to continue to monitor very closely, namely the number of daily transactions and the number of daily active accounts. Again, this is all just relative valuations. So if the overall market is going down, then of course the US dollar valuation of Monad can very easily go down as well. So it might make sense to hedge such a position, right? To go long Monad and to go short something else, an altcoin that tends to fall more consistently. Now, there is a reason why the altcoins are performing so poorly, so consistently. It's not like everybody is taking profit. It's rather people like this, venture capitalists that invested in various crypto projects very early on. They got a lot of token allocation. That token allocation might unlock over time. And whenever tokens unlock, the VCs, the venture capitalists, they simply sell. It's a massive problem for the altcoin market. Every week we see hundreds of millions of new tokens from existing projects hitting the market. It's currently at around 600 to 700 million. Some weeks it rises above 1 billion. And the fundamental problem really is that there's not enough buyers for all of those new tokens. We can see this not just here on the macro, we can also see this in the micro. Here are a few examples. This is WorldCoin. WorldCoin is supported by Sam Altman, and there are token allocations for investors, token allocations for the development team. The number of tokens is going up constantly. And so WorldCoin relative to Bitcoin after the initial hype is just constantly going down. It's not a coincidence that WorldCoin crashed by 97%. But check this out. This is ZK Zinc. Also has an increasing token supply. Again, investors are getting their tokens unlocked. So does the team. And here's ZK Zinc's price relative to Bitcoin's. It has fallen from the top by more than 90%. We can go on and on. Here is Starknet with a lot of entities getting new tokens. Here is Starknet relative to Bitcoin. Here is Eigenlayer. Here is the Eigenprice relative to Bitcoin. And what we are looking at here is relative performance. So it's not just that the market in general is going down and Bitcoin has fallen by 30 or 40% and that also pushes down the altcoins. No, it's the altcoins performing much, much worse compared to Bitcoin. So when this relative valuation is going down and Bitcoin has fallen already by 30%, the altcoin has fallen by more than 30%. Again, this here is no coincidence. It's the insiders that are dumping on the average retail investor that doesn't really know what's going on. Now here's what I do in order to benefit from all of this. Let's go again to the Eigenlayer price development. Just as an example, right here we still have a lot of token inflation coming. So very likely this price will continue to fall further. So what I'm going to describe is very likely going to be a profitable trade in the next months. Instead of trying to buy the Eigen token, we can do the exact opposite. We can bet on the underperformance of the Eigen token. So we're just flipping this chart. Then it looks like this. Now what we see here in orange, that's the Bitcoin price over the time. So this kind of strategy does outperform just buying and holding Bitcoin by a lot. And again, it's not just random. It's not a coincidence. This is structural. It's because of the venture capitalists dumping on everybody all the time. And so we simply take advantage of that. Whenever a venture capitalist is selling their vested tokens, we are making money. This trade, for example, made roughly 1,300% in the last 12 months. So what do we need to do? We need to bet on rising prices of Bitcoin and falling prices of Eigen at the same time. So we're opening two positions, long BTC, short Eigen. And the reason why we want to open both of those positions is that we still have all of that correlation within crypto, right? So if Bitcoin was to suddenly rally by 20, 30, 40%, the Eigen price is likely also going to go up. It's simply just going to go up less. So when Bitcoin goes up 40%, then Eigen might go up by 20%. It still has the selling pressure by the team and by the venture capitalists that will, relatively speaking, depress the price. But the US dollar price itself might still go up when everything is going up. That's why we want to make the delta trade here. We go long Bitcoin, we go short Eigen. We don't just go short Eigen in itself. I'm following this kind of strategy already for 4 years. In the early days with borrowing and lending platforms, recently more with perpetual futures trades. But what we see over here, that's my alpha, my outperformance, my monthly outperformance versus Bitcoin in a given month. So some months I might still make losses because again, even that trade doesn't always go up. So if you shorted Eigen over here, you might have to wait for half a year to actually get in profit. So there are some negative months, but it's about the general trend. The dotted line here, that's my 12-month average. If we average out all of those dots, we come to a monthly outperformance versus just buying and holding Bitcoin of 1.9%. So on average, after fees, I make 1.9% more return than the average Bitcoin hodler. And that's with very conservative risk management. Here's my portfolio. This is not just trading. This is also dollar cost averaging into the trading account. And then I wanted to prove this directly in the market, not just showing here my results, but actually trading for the community as well. So in July of 2025, I opened up a community pool. The premium members, the annual premium members of Bitcoin Strategy, they were able to deposit into that pool. The capital pool had several $1 million under management. And while Bitcoin, during the time period, so we closed the pool just a few days ago, lost 24.9%, we made 17.3%. So over the last 5 months, we made more than just 1.9% alpha per month. And again, this is not just random, right? This is just working with the market structure, working with all of those cash outs that happen in the altcoin market all the time. Here are a few more details around that first copy trading pool. The average depositor in premium put in 17K. In the end, there was 20K in balance, so 2.7K in profit, 13.4% of average return. Now, why is this lower compared to what's shown over here in the chart? It's because most people did not deposit from day one. Many people waited to first see some positive performance and then afterwards deposited. That's why the performance from day one to the closure of the vault is 17.3, but the average member only made 13.4%. Then there is the 10% fee, so that comes from the platform. We use the hyper-liquid decentralized finance application. Still, when we annualize all of that, because this only ran for 5 months, this is 40.81% of return. Independent of the general market, right? We made money when Bitcoin went sideways. We made money when Bitcoin went down. We do this independent of where the general market is going. And again, the reason why this works is because we bet on rising prices of one asset and falling prices of the other asset. So when the general market is going up, then one of our positions goes up, the other position goes down. So this cancels out all the time. So the general market doesn't have any impact on this portfolio. The only thing that has an impact on the portfolio is how the altcoins do, relatively speaking, to our hedge. Now, there is a new copy trading pool starting in January of 2026. So if you want to be part of that pool, there's a dedicated video and premium that also explains everything in detail. How to deposit over there, how much capital should be deposited, what are the risks, what are the fees, etc. If you want to get access to that particular video, you can also message me directly. I will then send this to you. So this is all part of the premium membership. If you just want to manually copy trade what I do, I announce this to every member, so you can simply sign up for the monthly membership. If you want to be part of the copy trading vault, then you have to subscribe for the annual membership. You do save $250 per year subscribing annually, and you will get access to the automated copy trading as well. Every trade that I make will automatically be mirrored. And while I cannot promise that we will reach again 40% annualized return, I will work very hard to make this project a success again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.